Super thrilled. Today, we're going to get to some more questions. Before we get to some more questions, wanted to remind you real quick that if you are not a member, you're watching this on Facebook, or if you're watching it on YouTube as a live, make sure you become a part of the community. And we just added kind of new feature. We started answering a bunch of questions as they come in, and we're going to address them here during the lives as we do that. Remember, on Monday, we have a special guest that's coming, and this is all about multi-units. If you've ever wondered about knowing how do you do that, and this is somebody, John Kasman, who was a local investor in Chicago, moved to Cincinnati, and he specializes in multi-unit investing, both on the he has done the whole thing, the LP, which is limited partner side, on the GP as the general partner side, raising capital, buying that. Great guy to listen to. So we're going to do a live broadcast. Not only are we going to do that live, but we're going to also record the podcast. So you'll see the setup here. We'll kind of share behind the scene. We'll get started maybe 5 minutes before, kind of how we talk about it, what we say before the podcast. So you'll kind of get to see a little bit behind the scene. It'll be a fun one to attend. So make sure you're there. It's called 90 million worth of apartments. So how did he buy 90 million worth of apartments? How has he raised capital? What are the challenges? What are the successes? What does he feel he could have done maybe a little bit differently, or what does he feel he hit home runs with? So it'll be a great conversation. Make sure you attend and tell your friends and family and invite. And if you're inviting them to be a part of Burr Cash Flow, then we will add you for the next drawing. So if you invite, say, 10 people, the other day somebody invited 8 of their friends that joined. So now they have one chance for them, one chance for their wife, and another 8 chances when we do the drawing. So the more people you invite, the more people that join, the higher your odds of winning our prize. And the next prize is going to be a $2,000 in value. It's going to be 2 tickets, $1,000 each, up to $1,000 each, anywhere on the airline. So you'll hopefully go on a vacation with that. So having said that, let's jump right into it. If you guys have not been paying attention, I don't know if anybody saw the latest blurb in terms of that FHA now is allowing 40-year mortgages. So that's going to have an interesting impact in terms of real estate. So we are going to address that, not today, but we're going to address that maybe next week sometime. It'll make for, I think, a great topic. So having said that, let's look at the questions today. So we're going to start with a question that I think a lot of new people wonder, and this is, I am new to real estate. How can I just get my foot in the door? Right? And this is a great question, because a lot of us, when we're new, we have wondered this, right? Because there are 3 types of people that I feel that come to real estate. And what you have to think about always is, whenever you come to real estate and you hear a great speaker speak, you hear somebody talk about what they have done. What you have to really be very careful of is that just because somebody says they did something, what you have to think about is this applicable to me, right? And if it is not, then can I find somebody that was kind of in a similar position? Nobody's going to be exactly the same, but kind of in a similar position like me, that I can find to emulate and to duplicate what they're doing. Now, what I mean by that is this: like, if I told you, hey guys, in the last, say, 9 months, right, I bought 40 properties, right? Is that something that's going to be duplicatable for somebody new? That's not going to be duplicatable. I'm not saying it's impossible that you can do that, right? I'm just saying that 99.9999% of people are not going to be able to do that. That doesn't mean they don't have the ability or they don't have the financial wherewithal. In most cases, they're not going to have that kind of resources and funding. Now, did I have that when I started? Of course not, right? I mean, I barely one house. I used to gather money from 3 people to be able to buy one $60,000, $70,000 house. So when you look at somebody today, where they are, versus what got them there, what you have to look at is what got them to where they are, and how can I shortcut that? So what do we do in Mastery is that exact same thing. That what we say is, hey, listen, you don't have to do all the things I did to get here. There are some shortcuts. But what you can't do is you can't look at what I am doing today suddenly and say, oh, that's what I'm going to do. because you have to kind of climb up. Now we can shorten the learning curve. So when this question is asked a lot of times, because a lot of times people will say, well, Warren Buffett said this, he's doing this, so I'm going to do this. Guys, come on, right? I mean, just please. I'm not saying you can't learn from very wealthy people or learn from people. That's how we all learn. But what you have to learn to do is you have to say, hey, I want to get here, but I have to break it down. So if you're new, I would look at yourself into 3 different categories. Number 1, are you somebody who is young, middle-aged, or old? That's the first category. Number 2, are you somebody that has a good job, wants to keep the good job, and just is looking for returns, and you may be older, you may be just looking for returns from real estate. That's one category of investor. Second category is somebody who's middle-aged, who says, hey, real estate is going to be something I'm going to get into over the long run. Right now, I'm going to keep my job and start building real estate on the side. Somebody who's older generally is going to say, hey, I'm investing in real estate because I may have some resources. I may have some money, right? I didn't say they have to have it. But their way of looking at it is they're looking for good, stable returns, right? Like we have a lot of people in Mastery that come to Mastery for one reason. They have 5, 6, 800,000, $1 million, or 2 million. And they're looking for, hey, man, I can just actually lend out my money and I can get a 16% yield curve on my money. So imagine if they're lending out $100,000, that's $16,000 for the year. If they're lending out $500,000, right? You multiply that 16 by 5. So 16,000 times 5, right? They're going to make some pretty good chunk of change, right? In terms of just interest. If they're lending out $1 million, they're going to make $160,000 a year just in terms of their return. Now, you and I didn't start out that way. When I started investing in real estate at the time, when I started initially, I was 32 years old, right? At 32, I'm ashamed to say it, but this was the truth. I didn't have a lot of savings. I had some money, but I was selling real estate. So I was running on the treadmill as fast as I could. So I didn't have a lot of savings. I had to build it up through investing. So the strategy I had to use was I had to do flips because that was my day job, because I quit selling real estate. I should have kept selling real estate. That should have been my strategy. And then done maybe 1 or 2 flips and then gotten into rentals. So whenever you think about, hey, I am new, how do I get my foot in the door? The first thing I want you to think about is, okay, who am I and what is my profile, right? Is my profile an investor which is older and grayer, and maybe I have some money that I can invest? It may be your way of doing it may be a little bit different, right? Am I in the middle where I am 35, 40 years old, 45 years old? I have a profession already. I like it. If I have other choices, I'm going to switch to something else, right? If real estate gives me a couple $100,000 a year that are consistently, I can maybe upgrade and get out of what I'm doing so that I don't have to do what I have to do, right? That's another way of looking at it. Or am I the third person? Am I somebody who's younger? Am I somebody that has a lot of time on their hands and I can start doing real estate at a relatively younger age? Now, depending on who you are, what your credit is, what your experience in life is, how much money you have or not have, your strategy has to be adjusted a little bit. That doesn't mean, that has nothing to do with how much, where you can end up in the end. But what you have to think about first is, hey, from where I am, how do I get to XYZ? So when you think about how do I get my foot in the door, first look at what is my investor profile. That's the first question we ask anybody in Mastery. Based on who they are, then we come up with a business plan on how you should go about doing something. Actually, that would be, Ms. Jennifer, a great topic we should do. Understanding your investor profile, and then how do we develop a business plan in Mastery? Why do we have such a high success rate in Mastery? The reason we do is because what we do is we kind of clear off the clutter and say, hey, listen, if you tell me you want to go be here and you're here, Let's look at who you are, and we come up with the business plan for you so you can achieve that. So that's something that we should do that in the future. And I think this question will be answered because this is a great question. A lot of people struggle with this, but I wish I could just give you a quick answer. It's not quite that quick answer. Maybe next week, next Wednesday, look for that because we will specifically address that. And I think that should make for a great topic for about half an hour. So the next question came up is, and this question I'm going to skip. And the reason I'm going to skip this is not because I don't want to pontificate on it or talk about it, because I don't feel I'm the right person in terms of my qualifications. And that is how to file taxes with investing and refis. This should be a question because there are 2 or 3 questions within this. So I want to explain that, right? That how do you file the taxes? That's an accountant question. That's not a question that I can answer, right? Because your accountant should be giving you that advice, right? What is the best tax strategy for you, depending on how much real estate you own, how much income you have, how much depreciation you get, so on and so forth. But whenever you think about taxes, think about 3 things first. Number 1 is you always think about growth first. Number 2, you think about kind of a growth stage, your pruning stage, and protection stage. A lot of times what happens is this: people have nothing to their name. They're like, well, how do I protect myself? Protect from who? And protect from what? You have nothing, my friend. Nobody's suing you, right? You realize if a underinsured motorist runs into you and horribly maims you, you realize as long as it's just a civil litigation, he's not drunk, he hasn't done anything wrong, it just maims you. You realize there's nothing you can sue. Nobody's going to take that case unless he's in a work vehicle and you can go after the employer, right? What I'm trying to say is that, guys, if you have nothing, don't worry about a whole lot of asset protection. You have zero, nothing. Nobody's going after you, right? But if you have assets to protect, that's where all of this stuff kind of comes into play. But this specific question was about taxes, and I'm going to refer that to John, or we will have an accountant. We'll do a session with an accountant and let them address that. I don't believe I can show you how to grow with LLCs. I can show you how to grow with S Corps, how that relates to the growth part of the business, but not filing taxes. That's a very specific accountant type of question. So let's go to the next question. And that was, what is a REO? What a wonderful question, right? A lot of times people hear that term. A lot of people don't know what it is. What is an REO? An REO stands for real estate owned. That's a specific term that is used for properties that are owned by the bank once they've been foreclosed upon. That's what an REO is. So it's a property that is owned by the bank after it has gone to auction. Nobody at the auction buys the property and it becomes a bank-owned property. The industry term for that, right, the technical term for that is REO, meaning real estate owned. So if I own real estate, it's not going to be called an REO. If you own real estate, it's not going to be called an REO. If you buy a property at auction, it's not going to be called an REO. Only time it's called an REO is when it's real estate owned, meaning the assets that are foreclosed by the bank and that are owned on their books. So a lot of times you may have heard the term an REO agent. What is an REO agent? It's an agent that works with banks and sells their inventory. To the most part, that is their business. There are agents like Ryan Smith in the Chicago area. There's a bunch of other agents that's really a majority of their business, that they work with a lot of lenders and they represent the lenders in selling the REO inventory. Hence, they're known as REO agents. So REO stands for real estate owned. Now, this next question actually is going to kind of relate to that. Next couple of questions are going to relate to what we talked about REO. That's why I reserved them for last. Now, for kind of later part. Now, the next thing is it worthwhile for ListSource, Investor Carrot? I think they're talking about the Carrot website, carrot.com, which is a landing page for investors. If you're trying to attract the public to have a landing page where they can go in, fill out the information in case you've done a mailing, or if you're basically doing a like a ad on the radio, if you're doing billboards, if you're doing TV ads, it's a landing page where people can go in, fill their information in, and that's what it is. So it's called Carrot.com. It's a landing page, right? And it basically captures the person who lands on your page, their name, number, information, so that you can basically call them. Or Connected Investor. So Andrew has a list for Mastery and Chicagoland properties, but I'm in Winnebago County. So to simplify their question, this person happens to be in Winnebago County, and they are trying to figure out, hey, how do I get a list of distressed properties or people that may be motivated to sell? These are off-market properties. How do I get a list? The resource that we use, it's called PropStream, PROPSTREAM. I said online within the group at Burke Cashflow Investors that if you're from Mastery, let us know. Let Harry know. He'll be happy to send you the list. If you're not, that's still okay. You can join PropStream. They have a 7-day free trial that you can take advantage of. We should actually maybe reach out to them and get some sort of a discount code. Will do that. I just thought of that. Anyways, so you can basically go there, download that information, and you will have it available to you. ListSource, if you go to ListSource, great place to go get information, but I think PropStream is better. The cost of it is much less than if you go to ListSource, or there's a lot of list providers, a ton of them that are out there. It's just based on research. I think PropStream does a great job. They have all kinds of lists, pre-foreclosure lists, tax delinquents, county lists, probate lists, all kinds of lists that they have. And I think the price is pretty fair. They don't charge you per county or per lead. They charge you like a fixed amount, for that. And it's pretty much national data that you can get from there. So that's where we get the data. In Chicagoland area, we also get the data directly because we send people down to the courthouse and gather that data. So that's another way how we get the data. But if you just want it at your fingertips, you can get it through PropStream. And then we take that data and we use a service. It's called, oh my God. Now, I remembered. Click, CLICK, the number 2, Click 2 Mail, MAIL. Click 2 Mail is the service that we use for the mailings that we send out. We send out about $2,400-$2,500 ballpark worth a month. But the consistency is the key issue. I found a lot of properties that way. I think I've talked about it from time to time. I don't do a huge mailing. Some people do. I don't, but that's what it is. How can I get my first flip house? Through buying the property from a bank to fix and flip. If I was you, I would do this. Number one, I think you should go in a step-by-step process. So step 1 would be do what we call area selection. So in Mastery, generally what we want people to do is around a 35 to 40-minute circle around their house, right? You take your property and then you start looking for areas. So if you live in a A area, high A area, meaning you live in a really expensive area, let's just say Glencoe, Winnetka, one of those. Now you're going to have to get out a little bit towards Gurnee or some other areas, but you need to have a mix of B minus, meaning not quite the really expensive areas, but the areas that are reasonable. If you're looking to do a fix and flip, I would not at all whatsoever, period, try to do a flip in a very expensive area right now in the market. That is not a good idea for you. Just say it. So I would want to go and I would look at 5 different towns minimum, right? And that's where I would put up my search. So we call that area selection in Mastery, right? I would at least want to have 5 different towns. So if I'm looking here in the middle part, let's say around the office, we have Oak Brook, we have Lombard, we have, so let's just say I'm looking for that. So then I'm going to have Westchester, I'm going to have Bellwood. So Westchester is going to be an A area. Bellwood is going to be B minus to C, depending on how you look at it, right? I'm going to have the area right next to it, like Berkeley. I'm going to have Hillside. I'm going to have maybe Melrose Park, right? I'm going to have 4 or 5 areas like that, because so that I have enough of a geography to look for properties. Now, if you're more experienced, you can expand that. Like I tend to look around a huge geographic area because I can buy that. Initially, when you're new, I wouldn't try to go to 50 areas. I would try to have a general 30-minute driving distance from your house. The second thing I would do once you've done area selection, the second thing I would do is go to Redfin and highlight that area and set up a search. 1 bedroom or more. You heard me correctly. 1 bedroom or more, and all properties that if you're going to do flips, depending on what your back end value is going to be, then let's just say your back end value, ARV number, is going to be 400. Then on the front end, I would say, okay, everything up to say 250, 260, depending on what your back end number is going to be. That's how I would set up that search. Also, I would have an agent. If you contact an agent, if you're from Mastery, talk to some of the great agents we have at Mastery. If you're not, you can just have an agent that basically identifies properties that are REOs, short sales, properties that can be probate, any sort of distress. Besides sending you a regular search from the MLS, if they can set that up, that way you can basically find all the REO properties. Now you can just directly go after those because it'll shorten the amount of properties that are available, meaning less properties, but you can basically boom, 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 start identifying those and start having your agent contact the other agent to figure out if you can make a deal on something like that, right? So that's kind of the process that I would look at. And if you're looking to find some REO deals, now you don't always have to buy an REO deal. You can buy a property that is, in fact, right after the podcast, right? I'm going to go look at a property. That's not an REO property. That is a property that basically the people have moved out of. It's a vacant house, right? So you're looking for a deal is a deal is a deal. Doesn't matter where it comes from. But if you're looking specifically for REO properties, you can do a search in the sales under sales information in MLS. Your agent can set that up and put REO, bank-owned, court approval needed, and it'll pick out all of those properties out of the entire MLS. So you can set up that search. Your agent can set it up easily for you. The next thing is, question was, I've been looking, included connected investor. I like that I can search. I'm looking to rehab a 4-unit building with a basement, preferably 2-story, in a great location. Because I have my mother living with me, what am I doing wrong? So I think this person, what they're saying is that they're trying to find a property that is a 4-unit building in a great location. And they want a 2-story, basically 2 units on this side, 2 units on this side. So my friend, you and every other person, including me, right? We're all looking for a great 4-unit building with great prices in a great location, right? Now, that doesn't mean you can't find it, right? It just simply means that depending on how you define your great location, you're going to have to put in some work, right? And don't please just stick with a 4-unit. If you can find a great property that is a 3-unit, you're going to have more choice. If it's a 2-unit, you're going to have more choice. So I'll give you an example. We recently bought a property in Brookfield, right? It's a 3-unit building. So that's a building that this person can do a house hack in, where they can live in one and the other 2 units literally every single month pay close to about $1,800 a month, right? The top unit is $1,850 a month. The middle unit is $1,750 a month, right? Think about how much rent you can collect there. Even the bottom unit right now is renting for $1,350. So if you're living in the top unit, the middle unit, and the bottom unit, it'll give you enough rent so that it covers the whole building. You're effectively living in the building for free. So where do you find it? What I would suggest you do is this. Number one, set up your search in the areas that you want, right? So I would go to Redfin, do multifamily, and then set up your search there, because Redfin is going to notify you even before MLS will, and limit it to the criterias of areas you want to be in. There are plenty of multi-units available in areas that are not so good. But if this person wants it in a great area, understand you're going to have to pay a premium. I just looked at a property the other day, 4-unit building. We're trying to make it work, and it's a mint location, right? And we'll see what the numbers work out. We're not sure if the numbers will work out yet, but it's probably my buy price on that is going to be about 470. But still, on the back end, that building is worth at least 700. So at somewhere in the fours, I'm willing to pay that because I know the rents will make sense. I'll make money all day long. So that type of a building will work for you. But the first thing you have to do is figure out what those areas are going to be. So let's just say it's the northwest side of Chicago, right? Then you got to set up that search. I would set up that search to the MLS. I would also look at auctions that are upcoming. So I would look at Hubzu, I would look at Exome, I would look at auction.com, I would look at all of those. Now, depending on how sophisticated a buyer you are, I don't know if you're a very sophisticated buyer or not, but otherwise, all the sheriff sales, right? There's a lot of multi-units that go to sheriff sale also. That's another place to look. But remember, for that, you're going to have cash, right? You're not going to be able to buy that property if you don't have cash, and that's cash in hand. Right? So it may not be a strategy for you if you're not that advanced. Another place to look is simply by doing a mailing, right? There's a property we bought last year, which was a multi-unit building, right? And that was a 6-unit building that we bought, and it's from a mailing, right? So it depends on where you're looking. But if you're looking for a property in a premium area, right? Understand there's going to be a lot of competition. If you don't want to pay the top dollar, then you're going to have to do some digging because there'll be a lot of people that'll be after the same property because they'll have the same exact idea that you have, which is, hey, I'm going to live in 1 unit. I'm going to do a house hack, or I'm going to do, I'm going to basically own the property as a cash flow. If you're looking for that, certainly look at properties that are distressed. You can buy them with a 2 or 3K loan where you can get in the property virtually for zero out of pocket. If you know how to structure the deal, you can be in that property for zero, literally zero money out of pocket, because you can ask the seller up to 6% credit towards your closing costs, right? And you can use that towards down payment and closing costs and walk into a property zero. Those are phenomenal programs. And in fact, we have Denise as one of our sponsors from Guaranteed Rate. She can help you do that loan all day long. It's the Karan that's running at the bottom of the screen. She can definitely help you with that if you are doing that. But first place I would set up is MLS. Second place, I would look at a bunch of the auctions. Just the other day, I saw a property that was sold $368 was the sale price. And the rehab on that property was $82,000. How do I know? Because I had looked at the property, and back-end value on that was at least $660. So that was a good deal. I didn't buy the property because it's in Chicago. That's not a location that I really wanted to go with everything I have going on right now, but it was a good deal. It was definitely a good deal. So those properties are out there. It's just a matter of looking. Now, if you're that investor that is really, really seasoned and you're willing to go to auction, the sheriff sale, and buy it, and you have the wherewithals, then definitely that's another place to look. Or you can look off market, which is where I would suggest to this person you spend a little bit of time looking at the pre-foreclosure list, looking at the probate list, looking at the lists of vacant properties. And it's all going to boil down to what area of town do you want? Because if you want a hot area of town, you're going to have to put in some work to really find a 4-unit building where you can live in it. The tenants pay your all the rents, and you come out of zero out of pocket. Then you're going to have to put in some work. So super thrilling to be able to talk to you about all of these questions. We love these questions as you guys send them in. Continue to send those in. We'll answer some of them online. We'll answer some of them here. Remember, again, invite your friends to Burr Cashflow Investors. And remember, on Monday, we're going to have John Kasman talking about how to scale up in terms of multifamily properties. So that will be a fun that day we're going to be a little bit longer because we're going to be recording the podcast. Join in about 5 minutes before time because we'll start a little bit early, so you kind of get to see behind the scenes what goes into it when we record the podcast as well as we do this live. Having said that, guys, thanks a bunch. Become a member, be a part of it, and invite your friends. And hopefully you will be the next winner in terms of our giveaway of $2,000 worth of prize for 2 airline tickets up to $2,000. Thanks a bunch. Have a good day.